Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Tuesday, the 24th of January, 2017. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Light news overnight, not much to report this morning. In general, the earnings have been at the top of the news here. Yahoo reporting 25 cents versus 22 cents, only 960 million in revenue. It still beat the 911 million expected. Remember, this is the company that refused to buy Google way back. Also, Verizon and others have reported. There's just a slew of reports, 3M, J&J, and so on. Just keep an eye on earnings. They're likely to drive us around. The Eurozone preliminary manufacturing PMI came in at 55.1 versus 54.8. But let's see, yeah, that's that. And then the German preliminary manufacturing came in at 56.5 versus 55.4. That'll make it the 26th month of expansion and highest since January of 2014. As far as what we're expecting for today, I won't go over that too much here. But today we're looking for uh, looks like the January preliminary market manufacturing in the U.S. And the Congressional Budget Office budget and economic outlook at 10 o'clock a.m. U.S. December existing home sales at 10 o'clock, as well as the Richmond Fed. Then we have a 4-week bill auction and at 11:30 and a 2-year note auction at 1 o'clock Eastern. And then we get the API crude, gasoline, and distillate inventories after the market closes at 4:30 Eastern. And that's really about it. Not seeing any speakers on the calendar. Let's switch gears here and take a look at what was expected yesterday versus where we were. Yesterday, the primary hypothesis was for the market to push up towards the LVN from the prior day. We were looking for it to push to here. And then the expectation is that we would see sellers stepping in at that point and then rotating the market down. The expectation is it would be rotated down to just below the prior day's low right here. That's the primary expectation yesterday. Secondary expectation was if it were to, in either case, we're looking for an open auction. And if it were to drop on the open, then look for it to drop below the prior day's low. Again, find buyers and reverse. In either case, we're looking for a push in one direction and then reversal in the other. Here's what we got. There it is. It's just right on the nose here. The LVN 6750 turn. The LVN was at 67.75. Missed it by a tick. So we had an open auction here. Not sure why my opening swing is up there. It should be way down here. Open auction. We've got an open auction as expected. Push up right on the dot at 67.50. Rotate down, bounce at the mid right here, push to mid, retest, failure through the mid, and then a push down. This push down was definitely not something I could jump on. Did not have any pullbacks or anything to trade off of on that. The first opportunity to actually do something with this was the pullback to the IB. I was looking for a pullback to the IB and to the prior range for confluence scale-in setup for the continuation down. The continuation down, no real scale-ins, so it wasn't as big a trade as I would have liked. There was confluence at the low and at the prior day's low and the mid. Remember, the blue line is the mid of the session, which is the high plus the low divided by 2. The teal line is VWAP. There was confluence at the mid with the prior day's low, but the market pushed to the opening swing low instead, providing about 2 points of heat, almost exactly 2 points of heat, before it rotated down to 56 for a lot of risk and little reward. And then the market just drifted up as it often does at or near the close. That's yesterday. So yesterday looked like the bottom's falling out. Notice that we hit our weekly numbers, the weekly expected range on the downside. The prior week was very compressed, so these numbers are pretty tight, but it pushed through the prior weekly range low, the expected prior weekly range low, by 3 ticks before it bounced, and now it's trading up here, back in the prior day's range. This is very much a market that just keeps the buyers just keep coming back. It kind of reminds me of this guy here. If you've ever seen a Terminator, it just no matter what you do to knock him down, it ends up coming right back. And that's what this market reminds me of, just as a side note. Anyway, so that's where we left off yesterday. Look out. There's the buyers have stepped in and have pushed us through. They've pushed us through the point of control, and they've pushed us through into the prior day's range on the close. So even though we have lower low, lower high, lower point of control, it's important. It's going to be important for buyers today if we still have it in us to get back to 2265 again. Remember, we're only about a point and a half away from that right now. It's important for today that the buyers hold and build a profile up here somewhere with a point of control that is higher. Otherwise, if we don't succeed at doing that today, then I'm looking for resistance tomorrow, resistance to sell against, and I'm looking for continued rotation down. Okay, so this is an if-then statement. If the market builds a higher profile with a point of control that is higher up, meaning we're migrating down and back up, bringing us back into neutral in the 2265 area. If the market succeeds at doing that, then this becomes just another dip, just like we've seen over the last few weeks, a dip down and then a reversion back to neutral. If it trades lower and it starts to build profiles down here, then over the next couple of sessions, I'm going to look for resistance. I'm going to be playing the primary hypothesis on the sell side. Okay, so I'm essentially moving towards a bearish outlook. But before we get too carried away, we need to look at what happens when we dip down. See, every time we dip down, you can see that the market ends up pushing up, pushing up, pushing up. It just continuously does that. We dip down, push up. There are buyers all throughout this area here. 2250 to 2255 has been bought every time we've come down here. So don't get carried away if you're a bear. If we look at how we built the profile yesterday, we put in a little bit of volume below, but really we haven't shifted anything or done anything substantial to change the current situation, which is that the market is in neutral. Okay. Overnight session. So what have we done since yesterday? The overnight session shows a terribly compressed profile, very little in the way of action. You can see the volume's 115,000, pretty light. Just nothing to price in. The market didn't price in anything overnight, and the profile is just a box with point of control just beneath us, point of control, VWAP, and mid all in confluence. The market just did not see sellers yesterday. And when I look at order flow, you could see that the overall um, the overall uh, uh, mood is that once we got through the sell-off at in the overnight, we had a bidder come in. We had a bidder come in at 22.60, moved this order to 22.60 and a quarter, and has continuously. You can see they're continuously sitting there, putting a bid under the market. That, as I commented in our chat room, that bid is likely to be one that's likely to remain steady. And remember, 2260 from over the last 2 weeks has been an area where the market has liked the battle. You could see that the overall cumulative delta is positive. It's green, but only slightly. Throughout the overnight session, it has moved from negative to positive to negative to positive. So here it is dipping below zero to go negative, coming positive, negative, positive again. And with this run up, we have a pretty decent delta to the upside. So overall, expecting a really choppy morning this morning. We're not accomplishing much despite the selling that we saw yesterday. That's the point that I'm looking to make. As far as what we're expecting today, guess what? We are right up against the 2265. So what are we expecting today? We're expecting an open auction. We're expecting a push up. We're expecting to find sellers, make another attempt to break through mid, push lower, target 2256.50, and then finish up somewhere in the middle later today. That is the primary hypothesis. It should be no surprise to you that this is the primary hypothesis. The secondary hypothesis, now remember the overnight volume, the overnight profile is very boxy and did not do any exploration at all. So overall, we're likely to continue to drift up. Secondary hypothesis, well, guess what? Same thing. We push lower, get down into 56.50, find a base, and look to come back up towards the 22.67 area that we tested yesterday. That's hypo 2. I hope you all see by watching these trader bites over and over and over every day, I hope you're all seeing the pattern that I'm following here, that the market is following. And once you see that pattern, you start to understand the story, the context, you start to form a bias based on the lay of that morning's market or its posture, and then you can lean on your order flow to find locations to trade against with some cover. Okay, so that's basically the package right there. As far as the webinar that was for order flow for today, scalping order flow, it's not actually a webinar. That's why you have not seen a registration link. I'm going to be releasing a video. You can comment beneath the video if you have questions about it. It allows me to producing a video allows me to control the environment and make the point I need to make without having to fiddle with webinar software and stuff like that. So if you want to be invited to that, or if you want a copy of the video, you can just join the mailing list. There's no spam in that list. You can join the mailing list. That's a part of the description of this video here on YouTube, and anybody that is on the website's mailing list is going to get an invitation to receive that video. So that's all I have for you, and good luck today. Take care.